Hello and welcome to this special report here at XM.com. This week, the pound crashed to an all-time low versus the dollar after the new government announced its budget plans. What will happen to sterling now that investors are losing confidence in the UK economy? I'm Maria Pachurdes, and with me to discuss this is lead investment analyst Rafi Boyadjian. So Rafi, can you explain why markets reacted so badly to Chancellor Kwasi Kwarteng's mini-budget, or fiscal event, as he called it?
Well, Maria, I think markets see the government's plans as quite unsustainable because basically they will borrow to cut taxes. These are unfunded tax cuts and they're quite massive tax cuts. They're the biggest tax cuts in 50 years, the second largest tax cut ever in UK government history. And this all comes at a time when the national debt is already high following the pandemic. And most recently, of course, the government announced a very generous energy package. So coming on top of all that to announce such big borrowing plans, this has really spooked the markets. And of course, let's not forget that we have high inflation right now. So interest rates are going up. So when you're increasing borrowing levels at a time when borrowing costs are going up, that just means that the interest payments are just going to keep piling up, and that eventually will make the debt, the total government debt, quite unsustainable, and also goes against the Bank of England policy. So the Bank of England is trying to rein in inflation, whereas what the government is doing, they're trying to stimulate the economy, boost growth, all of this, which would further make the interest rate problem worse by forcing the Bank of England to raise rates even more than they otherwise would have. And in fact, markets see now the Bank of England's terminal rate peaking at 6% versus around 4.75% prior to the budget. And when we have such a rapid rise in interest rates, this would mean that there's a bigger chance of the UK economy going into a bigger recession. So all of this has basically made investors lose confidence in the government's economic credibility.
Now, the Bank of England just made a move to put out the fire in Britain's bond markets. Can you tell us about their plan and how it might impact the pound in the short and longer term?
Well, we had, of course, some fallout in the financial markets, and one of the fallouts was on pension funds. So the rapid rise in government bond yields on the back of course, on expectations that the Bank of England would have to raise rates even more. This led to fears that some pension funds would collapse in the UK. So the Bank of England had to step in to keep yields down. So they're basically buying government bond yields, long-dated bond yields, to reduce the impact. And this, of course, comes following just after the last Bank of England meeting when they decided to proceed with the active sale of government bonds. So basically, they put that on hold, and now they're going to be buying long-dated yields for the next 2 weeks at least, to try and calm the bond markets. But this doesn't actually solve the actual issue itself, which is the government's economic plans. The new Chancellor Kwasi Kwarteng has said that he will announce on November 23rd a medium-term fiscal plan on how to reduce debt as a proportion of GDP. But there is speculation that he may have to bring that forward because he needs to do something to calm the markets. And until then, we could see yet more volatility across the different markets, the currency markets, bond markets, equity markets. And of course, we can't rule out an emergency Bank of England policy meeting either. Of course, that move that we saw regarding the bonds, that did not involve interest rates. The bank's next scheduled meeting is on November the 3rd. They may also have to make an emergency rate hike before then. But basically, we have a situation where the markets see the government being on a very dangerous course. So the only way to restore full credibility is for the government to basically scrap some of these tax increases, or at least put up some taxes to pay for these other cuts. Otherwise, it will be difficult for sterling to recover. Yes, in the short term, further intervention by the Bank of England would help, would provide a bit of a boost to sterling. But really, if the government doesn't change its plans or doesn't come up with, some solid plan on how it's going to finance these tax cuts, the only way the pound can recover is if the UK economy is able to get through the winter, to get through this energy crisis unscathed, and then after that we might even see some of those tax cuts boosting growth. But yeah, until then, it's going to be, if the government doesn't try to make things better, it's looking like it's going to be a very rocky ride.
Rafi, thanks so much. And thanks for joining us at XM.com.